Looking for ways to pay off your home loan faster?
You got me.
Then you're in the right place. In today's video, we're going to walk you through 7 strategies to pay off your home loan 8 years, 8 months earlier. So let's dive in, and remember to hit that subscribe button to keep up to date with all things property and finance. Strategy number 1, 2x baby, act like your home loan is on a higher interest rate. We call this strategy the 2x strategy, and it's one of the best ways to pay off your home loan faster. Effectively, you want to work out what your home loan repayments would be if the interest rate you're currently paying 2x'd or doubled. This simple strategy could help you pay off your home loan 8 years faster. Say for example, you have a mortgage of $400,000 and you're paying 2.1% interest over 30 years. Now the minimum monthly repayments are $1,499. Let's 2x this interest rate and work out what the repayments would look like on a 4.2 interest rate, which is $1,956. So if you were to pay $1,956 per month on the lower rate, you'd pay the loan off 8 years, 8 months faster and save a whopping $43,908 in interest. Yeah, you're right, that's a lot of money. And to put in perspective, $43,908 is equivalent to 2 base model Hyundai Elantras or an all-expensive paid trip around the world for 2. Another added benefit for this technique is if interest rates go up in the future, you actually won't be caught out because you're paying an already higher repayment. Strategy number 2, extra and lump sum repayments. Now they say every cent counts, and it is certainly true when it comes to your mortgage. Paying above regular minimum repayments is a surefire way to pay off your mortgage faster. The best part? You don't need to pay much more to reap the rewards. In fact, on a 30-year home loan of $500,000, paying only an extra $25 a week or $3.50 per day could see you become mortgage-free 2 years, 3 months ahead of schedule. It might make you think twice before grabbing that cup of coffee next time. Lump sum payments in your loan are also a great way to pay down your loan faster. Did someone say tax return or bonus? These windfalls are a handy source of cash that could help you pay off your home loan sooner. Here's the deal, these windfalls are money that you already learned to live without, so it's unlikely you're going to miss it. Using these lump sum payments to add to your mortgage will have a drastic impact on your loan balance, which will accelerate the time it'll take to pay it off. As with the same example we used earlier, on a $500,000 loan, making a lump sum repayment of $10,000 in the second year, having your mortgage will cut 10 months off your loan term and save you $12,800. It might even be worth making it an annual habit. Paying your tax return in your loan will increase your savings of interest. Strategy number 3, making fortnightly loan repayments. Now, if extra and lump sum repayments might not be your thing, then we've got you covered. Try paying your loan more frequently. Did you know that halving your monthly repayment and paying it each fortnightly will reduce your loan by 3 to 4 years? Effectively, halving your monthly amount per fortnight means you'll actually pay 13 monthly repayments per year instead of 12. That extra 1 month's payment each year will help to reduce your loan faster without impacting your back pocket. Borrower beware here. It is crucial that the repayments are paid half monthly. That means halving your full monthly repayment and paying that each fortnightly. You do need to be careful here because some lenders will set up your fortnightly repayment so you're paying the minimal amount off, which doesn't actually have the same effect as paying half monthly. Strategy number 4, avoid bank fees where possible. Now here are the facts. Getting a loan, there's going to be some fees applicable, both to the government and to the bank. Given the government fees are non-negotiable, we're going to focus in on bank fees. Now we've covered this before. Bank fees can add up to $100 to $600 per application. You've got things like application fees, loan establishment fees, documentation preparation, valuations, etc. The list goes on. However, if you've got less than a 20% deposit, the most expensive fee payable to the bank will be the lender's mortgage insurance. This ranges in costs from a few $1,000s to tens of thousands of dollars. The cost is based on a sliding scale. Effectively, the less deposit you have, the higher the cost of the insurance. Did you know that the mortgage insurance also varies in price from lender to lender? In some cases, the differences can be substantial, so it pays to have your mortgage broker compare this cost when reviewing your loan options. The lender's mortgage insurance also can reduce drastically depending on which lending margin you're in. For example, if you're lending 91% or $500,500 of a $550,000 purchase, the lender's mortgage insurance can be as high as $19,000. If you're able to find an extra 1% or $5,500 and bring the loan amount down to $495,000, the mortgage insurance will reduce by $9,000. It also pays to avoid loans with annual fees. Some lenders charge up to $395 per annum. Whilst this annual fee might not sound like much, it all adds up and will cost you $11,850 over a 30-year loan life. Strategy number 5, get the right type of loan. Now think about this for a second. The wrong type of loan is as bad as the wrong type of home. When selecting the right type of loan, it's important to think of a loan that allows you flexibility to pay it down faster. For example, if you're thinking of a fixed rate loan, you might be stung with penalties as you can't pay more than $10,000 in extra repayments per annum. So here's the deal. Before you select the loan, you want to make sure you have a loan that gives you flexibility to pay unlimited extra repayments with the ability to still access those funds should you need to in the future. If you still want a fixed rate, but you don't like the limitation of being able to only pay $10,000 in extra repayments per annum, fortunately, there is a simple solution here. It's called a split rate loan. Having a split loan will give you the flexibility to pay as much as you like off the variable part, as well as having some certainty when it comes to the fixed loan. An example of splitting your $500,000 loan 50-50 would mean that you have $250,000 in variable and $250,000 in fixed. You can split your loan any which way, 90-10, 70-30, 50-50. The choice ultimately is yours. Strategy number 6, avoid interest-only repayments. Setting up your loan as principal and interest repayments is literally the simplest way to cut thousands of dollars in additional interest from your loan. Since the raw commission interest-only repayments have certainly become less and less common, however, there are still plenty of lenders out there offering you the opportunity to pay interest only on your loan. There can be certain times in which an interest-only loan makes sense, like for a construction of a property or even an investment property. The benefits are that you have a lower repayment over the period of time that you've got the interest-only repayment. Whilst lower repayments might be an upside, there's a huge downside in that it's going to cost you tens of thousands of dollars in both interest and principal that you won't pay off your loan. By paying principal and interest repayments, you can be sure that you're reducing the compounding effect of interest and will result in paying it down much faster. Even Albert Einstein said compounding interest was the 8th wonder in the world. He who understands it earns it. He who doesn't pays it. Compounding interest is the most powerful force in the universe. Strategy number 7, get your budget in order. As the saying goes, money is a terrible master, but an excellent servant. Simply put, a budget will help you track your spending and make you aware of where you're spending, as well as work out what's not essential. Using apps like Pocketbook or YNAB will help you keep track of your spending. Half the battle of budgeting is actually being aware. And there you have it. You're now in the know. So it's over to you. Are you looking to buy a place? Did you know at Mortgage Broker Brisbane, Hunter Galloway, we help people Australia-wide? Simply reach out to us and call on 1300 088 065 or visit us online at huntergalloway.com.au. And as always, thanks for watching. We'll see you next time.